Good afternoon, traders. This is Michael coming to you from Game Edge with our midday recap of price action and kind of looking at where our market trend model is at, as well as what our tools are indicating for our intraday volume analysis. So we've pulled back to the transition that we discussed about pre-market this morning during our pre-market preps. Make sure you review that. As I said, moving to the upside was probably going to be difficult because the significant amount of out-of-the-money calls that we had overhead. I think I saved that presentation from this morning. So here was our 0DT this morning. We discussed these out of the money calls above us, where we're going to open at. 67.40 was going to be that first gradient where we possibly see some stalling. We talked about the out of the money call charm. Again, that was going to be difficult to move to the upside unless we saw call speculation come in, and we'll look at our volume command, which we were not seeing at the open. So that again led us to the pullback down towards 6680 as well as the transition level. I said it was obviously not out of the realm of possibilities to see a pullback towards transition area, and again that would be an area that we'd look to get involved along the market, and most likely would be supportive type area. And then we had a drunken sailor range too. So just a pullback to the transition areas. So far our low was 6693, so this was 0DT transition. And then we have the full expiry transitions below. And then now we're just chopping in the drunken sailor range, and we're trying to push out of the drunken sailor range here. We're going to need to see our vol command. Yeah, so I'll show you two tools that were pretty cool to watch. When we saw that the out of the money put speculation started to dry up. We'll look at that here in a minute. So trying to move back to the upside on the drunken sailor range. So two of our tools. One of our tools that I was watching is our vol command, and I'll pull, hold on one second, I'll pull an earlier run of our vol command. So call and put centroids here, if these are moving to the downside, that again is indicating that speculation is to the downside. So we'll look at our earlier runs from today. I'll pull the, let me pull that earlier run. So we run these every 5 minutes, obviously. Let me grab another one here. Just grab this one. So this was earlier in the day. This is our 11:20 run, and this is actually where we started to see some of the out of the money put speculation start to dry up a little bit. You can see both of these slopes are to the downside. I have another chart that will help you visualize this also. But both these slopes are to the downside. This is indicating call speculation is not out of the money speculation higher. And the put speculation, we did have a couple large spikes come in at 66.55, but then it fairly well leveled off. So what we were looking at on the centroid chart here is the put slope here. This is obviously to the downside, and then it crosses over to the downside, and then your call centroid is here. And then this will start to level out to the 0 point, and then it will actually start to flatten out and go back positive, obviously indicating that the call speculation, or sorry, the put speculation to the downside is starting to dry up. And then here we have our rate of change table. This is based on that cent tab command that I just showed you. And when you know it, 1125 and 1140 were the call rate of changes, and you see the spikes over here corresponding. And then actually the rate of change went positive on our put slope right around that time, 1125 and then 1140. And that was 1138 right here and 1140. So that you can tell that once the put centroid starts going positive, and the rate of change is positive, then that means that out of the money put speculation is starting to degrade. So most likely we're not going to go lower from that point. So that's how we use our intraday volumetrics and tools. When I saw this come across, I was 1125 was that first spike that we saw within price action right around here. Right around here. We saw that run back up, and then 1140 right here is when we started changing back to the upside. So there's just not sustained out of the money put speculation to keep our move going lower. You can see it here. This is a rate of change of the put slope, and you see the put slope actually getting less and less negative as we continue to rise, and it actually went positive right around 1245. So that again matches what we're seeing here with the flattening of the put slope. And then if you get your microscope out, it actually has a slight positive slope to the put centroid. So if you're a bear, you want to see this continue to the downside, this negative slope on the put centroid like you were seeing here, but it's actually flat. So this is going to be difficult for price to go lower unless we see this change into the afternoon. And then you actually saw the call centroid. It was extremely negative, and it starts to actually flatten out into this overhead here. You see the bar chart here. and then you see this call centroid slope actually start to flatten out. So it's indicating some call speculation is starting to move back to the upside. So linear fit line here, centroid here, you see it continue to drop, 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 and then right at 67.20, it really starts to level out. So again, this is an important view to keep watching our intraday for our members that are intraday trading. This could have told you if you were shorting this overall move to the downside, then the out of the money put speculation was starting to stop and starting to dry up. So most likely we're not going to move lower. So this is an area where you can start taking profit. And then lo and behold, it matches our 0DT transition level that we talked about this morning. So we see a confluence of the volume of market participants starting to drop, and then we pull right back to the 0DT transition level, which is what we talked about. Then that's a confluence, and that really gives us extra confidence in our trades of saying, okay, this is where we might want to go long. If we're in a spread, this is where we might want to put a spread on. Again, selling something below, the opportunity for us to go lower is starting to not be advantageous. And then the opportunity to move back higher is starting to come into effect. Now, this could all change into the afternoon. We can't really get out of the drunken sailor range. The reason is we still have a significant amount of out of the money call charm overhead. That's just continuing to grow throughout the day. So that's going to be a difficult snowball to push up that hill unless we see a large amount of calls come in. So we'll continue to watch that move as we move into the afternoon. And then combine that with our market trend model. We had a quick move to the upside. We touched the colored ribbon, and then we started coming back down. And then obviously into the afternoon now, we're starting getting a little bit more positive slope. And then we came back down, 11:45, and then we started seeing our tick index, our market trend model turn back to the upside and get back above these shorter term moving averages. So if you were shorting, you should be looking to close out some of those positions and at least start taking profit. And then if you were looking for a long, that was an opportunity to be long or put some sort of option structure on. So hopefully that helps. That's how we use our intraday tools. It was all available for our members. We were watching it as it came right down into the transition level. And then also once you get below these drunken sailor ranges in 6,700 we talked about this morning, or 67.10 or 67.20, once we start getting below that from our pre-market prep, let's go back to that. Pre-market prep this morning was the gamma level. Once we got below 67.20, we were going to be removing these deltas at a faster clip or a faster rate. So it's going to be easier for us to move down. That was that net gamma sensitivity level, those in the money calls. Those went out of the money, and that's high sensitivity level was 67.20. You see what happened once we got below 67.20, right around this area right here. 67.20 was this area right here. We got below that, then we started removing those deltas rapidly to the downside. So that's your fuel to the fire, and that's where the gamma kicks in. And then we move back down to the 0DT transition. So we had an excellent game plan for today. We knew it was going to be difficult to sustain this move and try to push higher because out the money call charm and overhead weight. And then a pullback to transition was a highly likely possibility or probability today. And then we're bouncing off the transition level now. So if we continue on this path via our vol M command, I'll go ahead and pull up the latest one into the afternoon. Then most likely put speculation is continue to dry up. We'll just continue to traverse sideways. Obviously holding 6,700 is going to be important. And we'd like to see this call centroid flat. You can see now we're kind of forming parallel with the bolded green and the bolded red, and this is probably going to be your parallel lines for the rest of the day. So hopefully that helps. Ask me any questions. Let's get to this. Can these metrics be converted to a plot on TradingView itself or a chart in your framework along with price? Yes. So our two charts, so this is the volume that's being transacted, right? That's what this centroid is, the volume transaction. This is actually price here, TT. This is spot price of SPX. Okay, so that we've overlaid spot price into this chart for you. No, this is all proprietary for GameEdge. It cannot be put on TradingView. But yeah, so this is now I'm not going to say never, but this is our intraday volume chart, and we produce this, and you can run this any minute of the day you want, but it's automated for every 5 minutes. So you can this is spot price overlaid that chart. So 11:40 a.m. was when my stat arb vector price on went from short to long ES futures. Cool, Jeffrey. Glad we have a confluence. There's multiple trading multiple ways people trade, right? As they say, lots of ways to skin a cat. We just like to look at the SPX option structure and how the market participants are positioning, and how they're positioning is how spot price usually goes. Tail wags the dog, right? So that's what we like to look at. Would love live analysis like this every day. Trade Genius, it's in our Discord, gameedge.us. You can come and sign up. Pricing's right here. We have extensive commentary going intraday. We have extensive education about the volume chart, about all of our volume analysis via videos, as well as open mics where we've answered members' questions. We can answer your questions live, either within our trading chat that our Game Edge team is in, or on our open mic on Sundays, and then you can watch the recording back. And then Game Edge FastPass contains all of that content to learn how to use the volume command. So, got it. Is there a chart which shows price versus gamma levels overlaid with the volume chart? So we do not have that chart, but we do have the 0DT minute chart, and this is basically your gamma levels right here. So the reason is because you want these separated. You would not want... Now, our web app will have this available in it, our dashboard that we're currently working on and hoping to roll out soon. So basically what you'll have is a quad of a dashboard of charts. So basically you'll have this 0DTE minute chart. Obviously these are the gamma levels overhead, matches our web app. This is price action minute by minute. And then we'll have our volume chart. So you'll have a quad of what's occurring at the same time. Volume chart, minute chart, web app if you want, and then you'll be able to use plug and play widget style, whatever other charts you want. So yes, that would be the Game Edge FastPass right here. Free courses, sign up for the Game Edge FastPass. Everything is in there. We go through Charm, Vanna, anything you want to know about the Greeks. It's all in there. We actually use examples. We use our netstat command for examples and help you understand. Now, the only time Vanna really makes an influence is if there is a drop or increase in volatility. Yeah, have at it, TT. It's all free, and that's why we do it. We put all this stuff out. Hours and hours of Game Edge FastPass went into perfecting this. We had initial kind of Wikipedia style, and then we went to this Game Edge FastPass course from feedback from our members, and we curated feedback from a lot of people that had come in and tested Game Edge and said, hey, this doesn't make sense. Hey, you guys need to revise this. And that's where this is at. This is all member driven. So if there's any resources there that you give us feedback on, that we can make it clear, that we can make better examples, that's what Game Edge is all about. It is member driven. Yes, we do have a team. Yes, we have a North Star of where our whole team wants to get to, but it is all member driven. So yeah, Joby probably doesn't have enough OI open interest. Actually does. There we go. I was surprised. So let's see. So this ticker has not been updated. The last update was 9/15, so this may have actually dropped off our OI list because of if the OI has dropped, if the total OI has dropped. Yeah, so the OI has not been updated as well as the Greeks, so this has probably dropped off our master list just because of OI. The filter is 100,000 OI. And this may have dropped below that filter, so it drops off the list. But we can add it back on if you're a member. You just open a ticket and we reevaluate it. If you want it added back on, we just want to make sure that our dealer metrics and the hedging metrics are able for our members to be able to use our web app to look at the structure as well as the speculation. So PLTR obviously has more than enough volume. Call dominated bundle of spot price. We posted this one on X and was a comparison to Meta that was actually put dominated. So this is call dominated, supportive on any pullback. PGX is 190, COI you see up here at 200. Let's look at this expiry. I want to see if the structure advances. We mechanically go through this. So this is Friday's expiry. When I move to the next expiry, I'd like to see this PGX and COI advance, these green dots, and I'd like to see transition move up. So let's see what happens. and it does not, right? And transition stays stagnant. Actually, transition moved up slightly, moves up about 2.5 strikes, but peak X and COI does not move up. I like to look at the net or the net OI of the 200 strike also. So it's 93.98. 200 strike is 14,000. So it's actually dropping after this expiry and not necessarily increasing. That's why PGX and COI is not moving up. Not saying PLTR is not going to appreciate, but you'd like to see this PGX and COI move up to 200, indicating out of the money call speculation. So that is opening of out of the money calls. Our book gets longer, dealer book gets shorter. They have to hedge, and that just starts the process of price appreciation. And once the ball starts rolling, then it can roll up the hill, towards 200. But I would say it's probably going to be tough to get to 200. All expiries, you see COI is 200, PGX is 190. And what's nice is you can keep clicking through these expiries, and you want to see if it actually jumps up. So actually the monthly expiry here on 10/17, PGX actually drops to 180. COI is up there at 280, but that 280, that's a significant strike up there. And then after the monthly expiry, PGX and COI are 200. So maybe after the monthly expiry, it has the maybe the probability to appreciate towards 200. So when you speak of the up move limitation on XPX due to the out of the money calls above, is that due to out of the money closing out? And would that be more SPXA or SPXP? Okay, so Scotty, we separate the SPXA and the SPXP. SPXA is AM expiry, and it is obviously you see the contracts on the SPXA do not turn over as rapidly, right? So that's the 40,000 foot view. That SPXA exerts intraday force just via the structure, but it's not what's turning over rapidly in the as 0DT, right? So when I talk about out of the money, the out of the money calls, they are out of the money, right? So they are limiting out of the money towards zero, right? They're not in the money, so they're not going to positive delta. So as they're limiting towards zero, right, negative delta, right? So the out of the money calls and also the charm above us, if they're out of the money, okay, calls is continuing to grow. That's what we talked about on the net stat command here via the net delta. Out of the money calls 67.40. And then the net charm at 67.65, that's obviously significantly above spot price, but those are limiting also since they're out of the money towards zero. So that charm just continues to grow like a balloon overhead as time ticks through the day. So that just is a headwind. The ceiling just continues to get larger and larger as the day continues on. Now, that's why we say moneyness matters. If we start capturing those out of the money calls and spot price starts to appreciate, via intraday volumetrics. The intraday volumetrics are mechanically opening and closing of contracts of market participants. If they start speculating higher and spot price starts moving higher, then we start capturing those out of the money calls. Those become in the money. So you're capturing more positive delta. Our book becomes longer because they're going from out of the money to in the money. The dealer book becomes shorter. And their whole goal is to hedge and provide liquidity, right? So they have to hedge flat. So if they're getting shorter and we're getting longer, then they have to hedge. The only way they can hedge is to buy some sort of instrument, whatever that instrument is. Futures, underlying, if it's single stock or equity. So that's why we say moneyness matters. And overhead, out of the money call speculation is great, right? But when you have that amount overhead, it's going to be difficult to overcome via the intraday market participants. Hopefully that makes sense, right? So we have to have, so if you look at this line here, say the total OI is, net OI is 3,000, that's 3,000 contracts sitting there, right? So our intraday volumetrics are going to have to be ticking off at 500 to 600 contracts a minute via our volume command, or via our volume command, which I can show you here. Our intraday. So you're going to have to be ticking off at 500 to 600 contracts a minute to start overcoming and going through those, or more than that, I should say. But as you can see right now, this is the volume trend. We're ticking off at 600, couple spikes at 600, and then you see what happens. We drop down to 200 to 300 contracts, right? So it's going to take a significant amount of volume. You want to see this volume needs to continue to be ticking up here at 800 and maintaining up here for us to be able to move through these strikes overhead. So 6710 is that upper strike overhead, right? and we haven't been able to get over it. That's that DS zone, right? But once we get over it, if we start seeing the volume pick up, ticking off at 800 to 1,000 contracts, like you saw this put spike here, then we might be able to move over that. But this aggregate needs to continue to grow on the volume, and right now we're not seeing that. You see, it's actually dropping down here to 300 contracts, right? So even if we get through the DS, we're going to need to see a responding increase in volume of market participants. Now, that said, we do have charm support below us as well as 6,700, right? So that's that transition area and charm support below us, in the money calls below us, because we're in the money calls below us and above us. So those will continue to be supportive also. So again, puts turn off to the downside via the volume command. We're coming into supportive type action, positive gamma, call dominated below us. So that's why we get the move back away. Dealers hedge in the opposite direction, right? So that's what we're having, is hedging in the opposite direction of where that level was below us. So this can be buoyant into the afternoon, right? And that's why we talk about, in a call dominated environment, we look for pullbacks towards those key gamma delta levels, transition areas, zero gex, key charm levels, right? Where we need to stay above for that balloon to be like a wet sponge and continue to support price, and then move away from those areas. So yeah, we could, Despina, we could see 6720. But again, you just see what's happening, right? This is very methodical. This is just grinding up right now. Really no transactions are going on. That's what I talked about via that vol M. The volume just completely dropped off. So there's no transactions. I mean, yes, there's transactions occurring, but we're not seeing any urgency to the upside. Look at the vol M command on an urgent update to the upside when market participants are just banging the volume, right? Significantly different than what we're seeing right now. This is just very malaise. We're just kind of, walking up the gradient sideways after supportive type action into transition and positive gamma and call dominated positive charm below us. We're just bouncing off of that level right there. So, and then just chopping around the drunken sailor range at the top of the drunken sailor range. So no urgency in market participants at the moment to have a swift move to the upside. So yeah, yes, absolutely. Watching paint dry. Yeah. And who knows? I mean, we may get some volume come in the afternoon. Yeah, it's all flat. Yeah, actually, yes, everything's flat at the moment, right? So yeah, we might get some urgency in the afternoon, or we might not, right? There's really no news on the horizon. Not being political, but other than the government shutdown, which is usually a nothing burger for the market, it doesn't really matter. Honestly, most of the news is a lot of it is priced in, unless there's significant event. And then if you're in a call dominated positive gamma environment, dampened volatility, news is dampened, right? That's why in a negative gamma environment, put dominated, volatility is amplified. The moves are amplified. So that's why when you see news in a put dominated negative gamma environment, you'll see those swift moves to the downside. It's just because the volatility and the gamma is amplified, or the response is amplified in those environments. So hopefully that makes sense. So yeah, I mean, and again, the non-farm payrolls, I honestly, nothing's changing the course. I mean, obviously I'm not talking macro, but we've cut, and nothing is really going to change our macro course that I can see. So I really don't see anything changing. The structure is call dominated. SPXA is call dominated as far as the eye can see. So if we start seeing degrading structure below us or above us, then we'll start seeing it day over day, and we'll see the OI change. We'll see our market trend model change, and then our GEX ratio was 2 this morning. Make sure you understand what I talked about. Our short dated call gamma was at an extreme. So it was logical that we were probably going to see a pullback this morning. I talked about that multiple times, that we were reaching an extreme. Let me flip over that chart for everybody. We were reaching an extreme on the short dated call gamma. Right here, we're reaching 2, right? Historically, previously, we've been 2.1, 2.4, 2.18. And again, this could go much higher if you have short dated call speculation coming in. But usually this is an area where we see consolidation and some sort of pullback. And that's what I was looking at this morning. Out of the money calls overhead were going to be difficult to overcome. Gamma ratio was extended, and we were just set up for a pullback and a consolidation day, really, and and nothing. Yeah, so obviously we got a dealer adjustment bar to the upside now, so there must be some volume coming in. Who knows what's happening. But we talked about this. This is really one of our number one setups in a call dominated positive gamma environment. Pull back to transition. Pull back to transition. Look to get involved. I think I say that 100 times to people. Everybody's like, well, where can I get in after this lockout rally? This is where you get in. Pull back to transition. Again, this could all fall apart intraday, but this is your best risk reward, a pullback to transition. We have a mechanical portfolio that does P-trans to plus GEX, right? Get involved here. If we go below P-trans or zero GEX or bottom of DS, then you're out of the trade, right? But that's small risk compared to your opportunity for upside. So don't try to get in as soon as the market opens. Wait for a pullback. Everybody says buy the dip. Well, why does that work? Well, this works because of this mechanism right here. Call dominated positive gamma, supportive on on pullbacks. Now, if this changes to put dominated in negative gamma, and we start getting below transition and zero GEX, then we change our philosophy, right? But as of now, everybody says buy the dip, but they don't really understand the mechanisms of buy the dip and why it works, right? Everybody thinks it's just, everybody's waiting for a pullback. No, there's actually underlying forces that are working in the SPX option structure that allow this to happen. The buy the dips, right? This is what happens. So yeah. So all right. Hope that everybody understands that. Again, thanks for joining us. Hopefully that was informative. Again, like and subscribe on X and YouTube. Sign up, and we'll let you know when we go live with the midday reviews and then our post-market recap. And then, as always, join us for our pre-market prep, where we go through our game plan and what we're looking at for the day. So far, it's playing out textbook, what we talked about in the pre-market prep. Difficult to move above, pull back to transition, and now we're moving back up through above the drunken sailor range. Everybody make it a great afternoon. Enjoy. Get outside. Beautiful weather here where I'm at. And thanks, everybody, for joining us. We'll see you. Bye.